Hello. Hey, everybody. Happy Friday. Let me move this over so I can see y'all on Instagram. What's up? Hey, everybody on YouTube. Okay, so when I move that over, they got into the light of that. Okay, awesome. So we should be good. So, hey, everybody. Welcome. Hope you're having a really great Friday. Welcome to y'all on Instagram. Hey, everybody on Instagram. Hey, everybody on Facebook and YouTube. Welcome. 23 Chunk, Evolution, LBB. These are some unique names right there. All right. So shout out to y'all for jumping on here on Friday. Look, we're getting into part 3. I don't want to be before y'all too long, so I want to just dive straight into it. If you have been following me, and I've been doing this series called Recession Ready, because for those of you that live in the United States like myself, there are a lot of things going on in this country. And we want to make sure that each one of us, I want to make sure that each one of us has the information that we need in order for us to be successful. So should a recession be announced in the near future, we have already made the preparations and we're not going to panic because we know what we need to do so that on the other side of that recession, we are set up financially to the T. Okay, so I really want to know where everybody's tuning in stuff from. So for those of you on YouTube, if you're watching the replay, please, and Facebook too. If you're watching the replay, let me know where you're watching the replay from. Drop your city, drop your state, drop your country. Okay, whatever you want. Wherever you are, just let me know so that way I know who's watching this live or the replay. All right, so shout out to you, CVet59. Welcome. Don't forget, y'all, to Facebook and Instagram. Hit the like, give me some hearts, give me some give me the likes or whatever, whichever one you want to do. YouTube, y'all, please hit the thumbs up. Okay, I know we do the hitting the hearts and then it comes up and all that stuff. That's awesome. That's great. But make sure that you hit the thumbs up first before you do all of that, because that's going to help the YouTube to send out my live to other people. Okay, so appreciate it for y'all doing that. And also don't forget to share this video, especially if you know there's somebody that needs a little tough love. Okay, like you've been telling them, man, listen, you've been talking to me all this time about what issues you having with your money and all this stuff or whatever. Like, when you gonna do something about it? So instead of you keep talking to them about it, just share the video, okay? And hopefully what I share with them today just gives them that little nudge that they need, okay? Because sometimes people can't get a little tone deaf. I know that has happened to me. There are people that have in my past have said stuff to me and I'm just like, yeah. Then when I hear from somebody else, I'm like, oh, shoot. But such and such did tell me that, so it is what it is, y'all. We're human beings. It just happens. Okay. So don't take it personal if a person finally makes the move because they hear me or someone else say the same thing that you probably said. That's just how it is. Okay. We're human beings. We do that sometimes. Okay. So just make sure you look out for them at the end of the day. This is going to help you look out for them, but also help you to look out for yourself at the same time. And for my people on YouTube, I definitely want to thank you. Hey, welcome. If you're new, if you have been here for a while, welcome back. And make sure that you hit that subscribe button, okay, if you have not done so yet. And also hit that notification bell for those of you on YouTube if you are not part of the Prosperity Cause community, because more than likely, if you're not part of the community, you don't know when I'm going live. So if you hit the notification bell, you'll know when I'm going live, okay? So that is it. That's it on that part. I do want to say this last thing before we get into the topic for tonight, y'all. I am not a financial advisor Instagram. I am not a financial advisor Facebook and YouTube, y'all. I only share information on this channel, on these social media pages, within this live stream. If you're watching the replay, okay, I only share these things that come from personal experience. So I've either done them myself. Other people have done those things because it applied for their life and they've gotten certain results, and or these strategies were told to me by my financial advisor. And there are some things that I have not implemented yet, but I do intend to implement. So please, y'all, do your own research with everything that I share with you. No matter what it's based on, please do your own research. Consult your financial advisor if you have one before you consider doing anything mentioned in this live stream and on this YouTube channel and on these social media pages. Okay. Because remember, y'all, investing in any market is definitely risky and should be taken serious to avoid unnecessary loss of money or just jeopardizing your livelihood at the end of the day. So I want to make sure y'all are good. All right. So now that all of that is out the way, I'm ready to get into this series, y'all. Last week, I covered 4 topics. All right. They were evaluate and adjust your financial goals. The second one was enhanced job security. So I went into detail on that. I also went into detail on maintaining good credit as well as investing wisely. Some of you know some of my story. There are a lot of things that I have done in the past and up to date that has either led me to be scammed or also has led me to be able to create a really nice nest egg. And that's why I help people and share things that I've done, things that didn't work, but also things that have worked for me. I share those things with everybody. So yeah, those 4 topics are what I went into detail about on last week. And I just gave some consequences when we fail to pay attention to these 4 topics, but I also gave some possible solutions to help you get back on track. Half Breed 84. All right. So tonight I'm going to touch on 3 more topics. I have 3 more left. So next week will be the last part of this series. But tonight I'm going to go over 3 things: that's health and life insurance, the importance of staying informed on the economic climate in your country, and then also why you should consider living below your means, y'all. Remember, everything that I'm sharing with you all tonight and in the past 2 parts of this series, they are all helping us to make sure that we are ready for a recession. There was something I shared with people part of my community, and it was just pretty much saying that we're going to be recession resistant. I looked up that term and I was like, oh my gosh, yes, this is it. We want to get to a point where recessions do not negatively impact us. If it does anything, it propels us to the next higher financial level, okay? The next tax bracket, if you want to go that far. That is the goal, ultimately, all right? So now some of you, I'm going to be honest, y'all, some of you may not agree with some of the things that I say, and that's okay. We're in a free country. If you're in the United States, okay, speak freely. I do want to hear from you because I want you to share some of your thoughts, but I want you to make sure. Now, listen, if you don't agree, y'all, that's one thing, but don't come on here disagreeing and don't provide a solution, okay? And give a solution that has worked. Not, well, my cousin, homeboy, friend said no. Like, give a solution that legit worked, either from you personally or like your spouse or your brother, your sister, like somebody direct, not 2-3 line, not 2-3, say people removed. Like, no, we ain't doing that. Okay. So provide some valuable solutions, y'all, if you disagree with anything that I say, because you're not going to always agree with everything that I share, of course. Because I'm not the end all be all with any of this, because like I said, I'm not a financial advisor, but I do want to make sure that we all are addressing problems that a lot of people are facing today or have in the past, but we're giving solutions to those problems, not just complaining about stuff. Okay. So let's go ahead and dive into number 1 topic. Number 1 is health and life insurance. But first, I do want to share some consequences to this, because there are a lot of things that can occur when you don't have adequate health and life insurance. Again, y'all, I'm not selling no insurance because that's not my bag, okay? I do have insurance, and this is the reason why I want to share it, because I've had insurance pretty much my entire military career, but I also have life insurance outside of being retired from the Army. I have a separate life insurance and whatnot. And so I want to make sure that everyone is aware of some of the things that you need to make sure that you're successful. But there are consequences to not having adequate health and life insurance, and that can result in substantial out-of-pocket medical expenses, specifically talking about your health insurance. And then also, when you fail to have life insurance, y'all, that can be a huge financial burden on your family. That's going to be passed down to your family. We're talking about funeral and burial costs. And this is why some of you may see a lot of those GoFundMes and stuff, because there are parents that don't have life insurance on their kids. There could be financial reasons for that. There could be, not understanding or not knowing, not having access. It could be a bunch of reasons why, but still, at the end of the day, this is why you may see those things, because people don't have, they are not paying for their life insurance. Okay. And on top of that, y'all, when you don't have life insurance, I want you to think about this. Your debt can be transferred over to certain surviving family members. And there's a lot of other things that can happen when you don't have adequate health and life insurance. But at the end of the day, the huge impacts that really happen when you don't have these things, y'all, is unexpected medical bills. You're going to be paying a lot of money for that. Funeral and burial costs can lead to significant debt, financial strain, and even bankruptcy. So when you're talking about all of this stuff, I really want you to just please, y'all, think twice about not having these two things in order today. Who is going to be impacted the most in a negative way when you don't have proper health insurance and proper life insurance? Again, y'all, I'm not selling any insurance, okay? However, I have seen the impact on families when a parent or when a person or a parent didn't have insurance on their young child. It is not a pretty sight, people. So I want to make sure y'all are aware of that. Now, on another note, okay, I did a bit of research and I found 6 types of health insurance. I want y'all to bear with me because I need you to know with each one of these types of health insurance, there are different benefits and of course drawbacks. So it's definitely wise for you to do your own research, communicate with who you need to communicate with, employer, whatever, okay? Especially if you hear about something that you aren't familiar with. But again, y'all, I can't say this enough. I'm not selling any insurance. All right. It's just best for us to all be well informed so that we can make the best decision for ourselves and of course our family. All right. So let's get into it. So the first insurance, we're talking about health insurance right now. First one I found was the Health Maintenance Organization, your HMO plan. This is pretty much the one that I hear most people talk about. But the benefits are, of course, lower premium and out-of-pocket costs, and the focus on preventive care, and it's coordinated care through a PCP, which is your primary care physician. For those of us in the military, we'll normally hear the term PCM, primary care manager, okay? There are drawbacks to that as well. So please make sure that you are researching these things to know what the benefits are, because there are more benefits, of course, but there are also drawbacks to that. Then the second one is your preferred provider organization. That's your PPO plan. Some of the benefits is they have a bit more flexibility in choosing your healthcare provider, okay? And there is no referral needed for specialists. And you have a broader network of doctors and hospitals. Again, y'all, there are drawbacks and more benefits, but there are drawbacks to a PPO plan. So please make sure that you do your due diligence and research if you're like, oh, that sounds better for me, okay? Number 3 is your exclusive provider organization plan. Now, remember, y'all, like I said, I'm not selling any insurance. I just want to make sure everyone is informed and you know what you have available, because we are making sure we are recession ready. So welcome to every single person that's jumping on right now. All right. So the EPO plan, some of the benefits, you have a lower premium than your PPO, the one that I just mentioned. There is no referral needed for specialists as well, but they only cover services within the plan's network. So that could be for you, that could be a drawback. All right. And on top of that, y'all, to be honest, this is something I found very interesting. I want to make sure that you know this. With this particular plan, there is no coverage for out-of-network care except for emergencies. All right. So please, y'all, make sure that you do your own due diligence when you are looking into these things. Number four is your point of service plan, POS plan. There are a few benefits with this. They combine features from your HMO and PPO plans. Those are the first and the second ones that I talked about when we talk about health insurance. And they offer some out-of-network coverage as well. Okay, now this is where we're going to start seeing with these, the ones that I mentioned after this POS plan. All of these, for the most part, they have either higher deductibles, higher premium costs, or in this case, for the POS plan, they have higher out-of-pocket costs for out-of-network care. Okay. Number five is high deductible health plan. All right. That's HDHP. Some of the benefits from this one is lower premium Eligibility for health savings account. Health savings account. This one is actually best for people with low healthcare needs. So for my young people, all right, you haven't really had any issues and whatnot, this will be more so for you. But remember, there are drawbacks to every single healthcare plan. So please make sure you research that, because with this one, it can be pretty expensive in cases of unexpected medical needs. All right. There are other drawbacks and other benefits, but y'all make sure you do your own research, because again, I'm not a financial advisor. I don't sell insurance. I don't do any of that. All I did was some research, and I'm sharing it with you all. So that way now you have a point of reference to go and do your own research and digging, and then figure out what it is you want to do moving forward. Okay. Number six is, this is the last one. This is your catastrophic health insurance plan. Oh my gosh, the way I just said that. Anyway, so some of the benefits of this one is lower premium, of course, covers your preventive care and emergencies. Again, this one is best for your young people, really healthy individuals. All right. Like I said, with these types, the last three that I just shared, 4, 5, and 6, for the most part, they have either high deductibles, higher out of network expenses, and then also this one specifically, number 6, the catastrophic health insurance plan. This one is limited to specific groups. Okay, so it's like an age group type of thing as well. So want to make sure you all know that. So there are 6 that I found, 6 different health insurances that you can kind of look into. If you don't care for the one that you have, by all means, do the research, y'all. Again, like I said, I am not a licensed financial advisor. I don't sell insurance. That's not my lane. Okay. But I did do the research, because I'm a person that I like to make sure people are well informed, as well as myself. All right. Now I'm gonna get into life insurance, because I believe strongly in having life insurance. I don't care if you do term life insurance and you're like, that's all I can afford right now. That is fine. Some life insurance is better than no life insurance, y'all. I'm speaking from what I have seen. Okay. Thank God I have never personally had to experience anything like that, because I've always had life insurance. Shout out to the military on that. But even me being retired now for 3 years, I made sure when I retired that I went through the process and I got life insurance. So I have term and I have whole life insurance. So does I have the I think it's just term for Ladybug. I want to say I just had a term for her, but I will get the whole life insurance for her as well. So that way, boom, she'll be good to go. And we can use that as a wealth building principle, but I'm not going to get into that right now. So here's the thing. I'm going to give you 3 different types of life insurance, y'all, for Instagram and Facebook and YouTube. Y'all, if this is making sense to you so far, if you're liking what you're hearing so far, please, y'all, do me a favor. Hit the thumbs up on YouTube. Hit those likes. Hit those hearts on Facebook and Instagram. And also make sure you share the video with someone that you know could use this information, because they have talked to you multiple times about their financial situation, and they're like, I have no idea what to do. They're probably not listening to you right now, so hearing it from somebody else, they might be like, oh, okay. All right. Don't get mad at them, y'all, if they finally start making some moves because they heard it from somebody else, even though you said it before. Remember, y'all, we're human beings. Hey, it is what it is. All right. So do that. All right, cool. So first one with life insurance, like I said, term life insurance. Now, this one offers several benefits. Again, please, y'all, make sure you do your own research on this stuff, especially if you have a financial advisor or something. I'm pretty sure they'll be able to help you with understanding it better than what I'm saying here in the next minute or so. Okay. So just get with them. If they should be able to help you with this. But some of the benefits are, of course, it's affordable more so. It's very simple, and there is flexibility, and it does make it an attractive option for people who are seeking temporary financial protection. Now, here's the issue, though. It does lack cash value accumulation. So there's no buildup, and it has a finite coverage period, and there are potential gaps in protection. Highlights some of those drawbacks. These are things that you really need to consider when you're choosing a life insurance policy. Again, y'all, I'm not selling insurance, okay? I'm just making sure y'all are aware. Welcome, Lonnie Love. So I'm just making sure y'all are aware, y'all. I don't want to be like, oh yeah, I'm about to say you something. No, that's not my lane. Okay. So that's number one. That's term life insurance. Again, get with your financial advisor because they should be able to give you a bit more of a visual on the differences between these life insurance policies that I'm going to share with you. The second one, like I said, I have term and I have whole life for me. And I have whole life because whole life provides lifetime coverage. That's number one. There is cash value accumulation. That's the other reason why I got it, because you can actually take loans out on your policy. Now, well, let me keep going with the benefits. So cash value accumulation, there are fixed premiums, okay? And there is a guaranteed death benefit, all right? And this definitely makes it a suitable option for long-term financial planning and estate planning. So for those of you that know that you want to leave behind a legacy, y'all, having whole life insurance is one of the many tools and strategies that wealthy people use to pass that on. I want y'all to think about something, because this is something that was shared with me, and I was like, wow, like I didn't think about that. But one of the wealth building tools that the Rocker family used was making sure that every single child in their family had insurance. So it's not just having a term life insurance. No, they had the whole life, because you can take loans out. You can use this to purchase real estate investment properties and stuff like that. So, but here's the key though. Here's the thing though. There is a downside. There's a drawback. Okay, like with anything else, one of the drawbacks is there can be high premiums. Okay, they can be a bit complex. They do have lower returns compared to other types of investments, like some life insurance policies. When we're talking about whole life, you may see about a 4 to 5% interest and whatnot. And I mean, for some people, it's like, man, I get that in a day. I get it, but still, at the end of the day, this is one of the many strategies you can use. Okay, but that can be a drawback, and a potential surrender charges are significant drawbacks that really need to be considered when you are thinking about whole life insurance. Okay. The last one that I've heard about, I actually asked about because I kept hearing so much about it from different people, and that is the Index Universal Life Insurance. I actually asked my financial advisor about this one because I'm like, I keep hearing about this. Like, why do people talk about this so much? So the IUL insurance offers different benefits like lifetime coverage. They do have potential for a higher cash value growth. That's one of the appeals, like something that is really appealing to people, especially people that have a very large kind of amount of disposable income, I would say. If you have disposable income for that. And on top of that, they have flexible premiums, however, and downside protection. Now, here's the thing. They are complex. They do have higher costs. So these are some of the drawbacks. They have variable returns, so it's not something that's fixed, like it's not a fixed rate. There is a potential for policy lapse, and implications of loans and withdrawals are significant drawbacks that need careful consideration. Y'all, it is imperative for you, Instagram, Facebook, YouTube, to thoroughly understand the policy details and evaluate your financial goals and risk tolerance to determine if an IUL policy is suitable for you. Please make sure that you consult your financial advisor like I did, or insurance professional, because they can provide you with valuable guidance in making an informed decision on this, okay? Look, y'all, at the end of the day, to be honest, having the right health and life insurance will save you and your family big time. Seriously, it's not just financial. I really want you to think about that. I mean, I know that's typically the first thought that comes to mind because the financial burden that it can leave on people, but I want you to think about this. It's going to save you emotional stress and frustration that can occur while you're also opening yourself up for better financial opportunities for the long term when you pick the right life insurance policy specifically for you. So look, y'all, I don't spend a lot of time on life insurance, okay, and health insurance and all of that. But the reason why is because it's a touchy subject, and it is often downplayed, especially in our community, in the Black community, but by a large population at the end of the day, y'all. I just want to make sure that we are touching on these things because this is going to impact people when there is a recession. So y'all, please make sure if you don't have the proper health insurance, you start getting in contact with whoever you need to get in contact with. Get it done today. Same thing with life insurance, y'all. This is not an option. This is a requirement to make sure that the people that you love are set up should something unexpectedly happen to you or to your kid. Like, our kids are not guaranteed to be here tomorrow. There are people who are losing their babies at, months. They're months old, a year, 2 years, 5, 10 years old. Like, come on now. We got to make sure that we take care of our kids. If you don't do this for yourself, if you don't have life insurance for yourself, at least have it for your kid. You know what I'm saying? Like, seriously, y'all, take care of your babies. At the end of the day, you had them. Please take care of them, like, for real. And you getting life insurance for you is going to take care of them in the long run, because let's say, God forbid, in the next 5, 10 years, you pass away and they just getting out of high school or something. Well, now they don't have to worry about anything because everything is taken care of, right? And you have a will in place. You have a trust set up, whatever it may be. Everything is in order. I need you as adults. Seriously, y'all, I can't say this enough. I need you as adults to really be an adult. Okay? I love you, but I need you to be an adult today. All right? All right, enough of that insurance talk. Let's move on to number 2, which is staying informed of the economic climate, y'all. We are in recession readiness mode. I need to make sure everyone, Terraquita, I need to make sure everyone is in recession readiness mode. You should have everything in order, okay? And this is why we're going to go over this topic, because I feel like this is very important, y'all. There's a consequence to not staying informed, okay? There's a consequence to that. You know what that is? You can make poor financial decisions. Y'all are hearing how there won't be a middle class in the United States soon. Like, I've been hearing that for the past year, 2 years or so, okay? But I want you to take this statistic and marinate on it, all right? In 1971, 61% of Americans were considered middle class. Last year, in 2023, that number had declined to about 51%. Now, I know some of you may be like, oh, Leona, but that's a 52-year gap. I hear you. Yeah, I know. That's a 52-year gap. However, what you're not thinking about is technology and the power of social media. Because right now, technology and social media is making it easier for us to gain access to money multiplying skill sets and opportunities. Now, I'm going to tell you something. Those people, maybe you, it may not be you, but those people who choose to stick to the status quo, I'm talking about, like that, staying with that old traditional means of making money, and I just need a job. All I need is one job and I'll be good. You know what I'm saying? I got it. You may feel like that, but here in the United States, y'all, and even people I know in Europe, hey, Kenya, oh, I ain't seen you forever. Hey, I hope you're doing well. But yeah, even people in Europe, like when I went to go visit in Belgium and Paris and whatnot, they're saying the same stuff we're saying over here in the United States. You cannot have just one income. One income is being too close to being homeless, y'all. I'm not kidding. You lose that job and you don't have a emergency fund, and I'm talking about big emergency fund. I told y'all maybe a week or two ago about this young lady I was listening to. She had 6 months of her bills saved up in a savings account. She lost her job during 19, right? Lost her job, and over that time, she couldn't get a new job. So they ended up going through her savings, Her and her husband and her kid, they went through her savings, and then she started having to rely on credit cards and racked up like 25,000 or so dollars of debt before they were finally able to get on their feet and having a new job. So yeah, I'm telling you, you don't want to be that person that's just saying, hey, I have this one job. Y'all get you a side hustle. Legal. Legal. Get you a side hustle. Okay? Like seriously, whatever people are constantly coming to you about, like if they're saying you're really good at this or whatever, you need to turn that into a moneymaker for you. Still work your job, especially if you love it. Still work your job, but you need to get something on the side. Some things on the side that are legal. Y'all, I can't say that enough. All right? But you don't want to be that person, because if you stay in that mentality and stand with tradition, and it's just, oh, I just need this one job or whatever, okay? Then what's more than likely going to happen, because it is middle class squeezes going on, you may fall to the lower class. While those other people who, like me, hopefully Kenya over here, hopefully are saying, hey, look, that one income not going to keep it. I'm investing in real estate. I'm investing in the stock market. I'm investing in precious metals. I'm over here trading. I'm buying oil. I'm doing all this. I have a business. I'm doing X, Y, and Z. I'm doing all of this stuff, right? So now you have money coming from the north, south, east, west, every which way. You are more likely going to be that person that eventually rises to the top 3 to 5% of the population. So what's going to happen is the people who stick with status quo, they're going to fall from middle class down to lower class. The people who say, hey, I ain't sticking with that because that ain't working, right? I see what's happening. They're going to elevate to the top 3 to 5%. You got to figure out which one you want to be, okay? Because what's going to happen is technology and social media is going to help with expediting, eliminating the middle class, all right? Casey, I hope you're doing well too and prospering. All is definitely doing well for me. Yay! I'm a preschool teacher now, and I do hair. That is so awesome. It's definitely important to have more than one income. That's right, teacher and do hair. So that means y'all cosmetologists make a lot of money. I'm pretty sure Kenya knows that. So, women love to pay for their hair. So I'm just saying, find something that you're really great at and then capitalize on that, okay? You don't have to break anybody's bank for it and whatnot, but make sure that you're getting what you're worth, okay? At the end of the day, you don't want to just rely on one income, all right? And here's the other thing, y'all. The impact of that, of not being informed, that lack of awareness can lead to missed opportunities and higher risk. Why? You're going to take bigger risks on stuff because you're fearing missing out. Well, if you were properly prepared and informed, you would know right now is not the time to execute that move. I got it. This is what they're saying. I'll give y'all an example. There was a person that was saying, man, y'all need to be buying into, Procter & Gamble. Oh, you need to buy into Procter & Gamble right now. I was like, man, heck no. Not for that price. It's at an all-time high. What I look like? So yeah, the price went up a little bit, but guess what it did? It dropped, bam. And I was like, see, that's exactly why I didn't do it. That's because I know how to recharge y'all. But still, you have to make sure that you are properly prepared, because unpreparedness, being unprepared for an economic downturn could definitely ruin you. Okay. And I don't want any of us to be in that position. So that's why I'm going to share a few things. Okay. So that way y'all can look out for it. So number one, the internet has so many resources out there, y'all. It does. But what I would suggest is that you stick to reliable sources for updated economic news and information, okay? So I want you to just choose the organization or platform that fits you best. I need you to pick what fits you best. Facebook and YouTube, Instagram. I need you to pick that, okay? Now, I'm going to give y'all a few that I check out frequently. Again, if it's for you, great. If it's not, keep it pushing. So I watch and listen to Bloomberg. I read the Wall Street Journal. I do check out Yahoo Finance and also CNBC from time to time, okay? There are more, but again, y'all, you just got to find a source that speaks to you, okay? Some people really like Fox Business. There are a few people that I watch here and there on Fox Business. I don't really watch it, as much as I do Bloomberg and CNBC and whatnot. However, find what works for you, okay? So with that being said, though, it is easy, y'all, because I've been there. It's easy to feel overwhelmed with all the information that is out there. So consider setting a schedule for when you want to be updated on economic news, y'all. Listen, it's a whole bunch of stuff that's out here. You got every guru out here on Instagram, YouTube, Facebook, TikTok, all these places that's telling you what to do. I need you to just pick the day of the week or days of the week and the times according to your day-to-day schedule that you want to catch up. So you can use apps. You can listen to like certain podcasts. Like I'll give y'all an example. There are people that I watch and or listen to on YouTube and definitely podcasts and whatnot. One of them is Market Mondays. This is Earn Your Leisure. I listen to them every Monday. If I miss it on Monday, I just go back and I watch the replay or listen to the podcast later, okay? Trapper Tuesdays, my guy, Wall Street Trapper, that's my guy. So I watch that every Tuesday. If I miss it on Tuesday, I just go back and I watch the replay. And of course, the Wolf of All Streets. And I do that every single week, y'all, faithfully. Okay? Because I want to know what's going on. Wolf of All Streets, he's more a crypto person. So I listen to him pertaining to crypto. Okay? But ultimately, at the end of the day, y'all, you want to limit your sources so that you aren't all over the place. Okay? And receiving a lot of conflicting information. So that actually can paralyze you from taking action. And we don't want that. All right? I don't want that. I want you to be a person that just moves when you get it and you have the information, you know what you're supposed to do, get it done. That's what I want you to be able to do, okay? Again, y'all, I'm not a licensed financial advisor or anything like that. I'm not selling any insurance. I'm just telling y'all what I do, what I have done that has not worked, what I have done that does work, what I'm doing right now, and what I plan to do. These are things that I'm sharing with you all. Take it, run with it, do your research, and then make your own decision, okay? All right, so for those of you that are just jumping on, thank you. Let me know where you're tuning in from. Drop your city, drop your state, drop your country in the chat right now. If you're watching the replay, do that as well. Don't forget to like the video. Give me a thumbs up, YouTube, and also share the video with someone you know could use it, because I'm telling you, sharing is caring, y'all. You don't want to just keep all the information to yourself. I'm pretty sure there's somebody out there that could use what I'm sharing with you right now. They could use that as well. So please make sure that you share with them as well. And YouTube, don't forget, subscribe and also hit that notification bell if you have not done so yet, so you know when I'm going live again. All right. So like I said, y'all, we want to make sure that you are understanding the economic environment, so that way you can make better financial decisions. Okay. You're likely to have a better budget and better spending and or investing plan, or investment plan, I should say, because you know how inflation works. And also, you know that the cost of living changes can impact you and your family. So you're in a better position. Okay. All right. Now, number three. We are on the last topic of tonight for our Recession Ready series. Okay. So this is live below your means. Topic number 3 is live below your means. Topic number 3 is live below your means. Skrilla Wilson, I'm pretty sure y'all were like, Leona, I know that already. Well, why ain't you doing it? People be knowing stuff, but then they don't do. Listen, y'all, this is something I heard years ago. And this gentleman told me, and other people, but he was telling us, he said, to know and not do is to not know at all. And I said, bro, you ain't lying. Because it makes no sense for you to say, yeah, I know I'm supposed to live below my means, Leona, but there's no but. If you're complaining about your financial situation, if you're struggling, you're living paycheck to paycheck, then you need to stop trying to keep up with the Joneses, as they used to say. You know what I'm saying? Stop trying to put on for social media, for Instagram, TikTok, YouTube, Snapchat, whatever. Stop trying to put on for all these other people and do what you need to do and make sure your family is straight. Because now for some of y'all, you may be like, you got to tell me, Leona, because I live above my means. Okay, cool. However, I'm going to share some things, okay, for those that are in denial today and need a little gentle nudge to get it together, okay, and cut some things loose. So let's get into some of the consequences of living above your means. So when you're living above your means, you're overspending. Okay, you're doing that. You're living above your means, and that means that you're going to end up depleting your savings and increasing your debt. Y'all, this will be considered like unnecessary debt or bad debt. You may hear one or two of those terms, either unnecessary debt or bad debt. At the end of the day, if you're overspending, you're putting money into things that you really don't need, then guess what? More than likely, that's bad debt. Okay? And the impact of that is pretty much, it can lead to financial instability, unnecessary stress, and of course, an inability to save for the future. Like your different needs. Like, let's just say you have a tire go out, blow out or whatever. Well, if you don't have a miscellaneous account for stuff like that, where these things, you're going to need to replace your tires at some point. You're going to need to pay for services on your car. You're going to need to pay for certain things to be fixed in your home, like getting a new dishwasher or, whatever, like somebody to come clean out your gutters, whatever. Like, I don't know, whatever you're going to need. Like, you should have an account for that stuff. Not just saying, oh, I just got a savings account and I just put money in there just because. No, there should be an account for things that don't come out every single month, but that it's going to be a necessity. It's going to have to be taken care of, right? You should have that, okay? And then have an account for emergencies, like, something's not covered with your health care, right? That's an emergency, because that's not something that is normal and you don't know that that's going to happen, whatever, but making sure that you have the money for that, okay? Not to mention, y'all, honestly, if you are making it a habit to live above your means, this type of behavior, honestly, is typically passed down from generation to generation until somebody in that family decides, you know what, man, it's time to make a change. I was that one. I'm going to speak for myself. I'm pretty sure that there are a few other people in my family. I can't name them, but it's not that many of us, okay? But there are a few of us that say, hey, yo, enough is enough. Like, I'm not living like, my mom, my grandma, and all them live. I'm not doing that. I'm not staying in the projects. I'm not living paycheck to paycheck. You know what I'm saying? I'm going to be a homeowner. I'm going to become an entrepreneur. I'm going to leave behind a legacy. I'm going to have life insurance. I'm going to have all of these things in place. Like, I'm going to do everything I need to do. So my question to you is, will that be you? Are you going to be that person today that says, you know what? I've been doing it my way for a long time. This is what I was taught. It's not working. Let me make some adjustments. So if that's you, then you want to listen to what I'm about to say next, okay? Don't forget, y'all, like the video. Boom. Give me some thumbs up, YouTube, okay? Give me some hearts, Instagram, hearts, Facebook, and then also share the video. Share. Malika Hamlin, share, okay, with every single person that you know that needs a little help, they need a little nudge, you know what I'm saying? Because they've been talking about they having issues with their money. Well, let's get them a little nudge so that way they can get their stuff together, okay? So remember, y'all, sharing is caring. All right, number one, when we are going to go from living above our means to living below our means, number one, we need to stick to our budget. We have to, that's the first thing. If you want to go from living above your means to living below your means, number one, you got to create a budget and stick to it. Stick to it. If you don't have the money, don't use your credit card, man. Stop using your credit card. Mama Laway. I don't want to mess that up, ma'am. So yes. Mama. Right? If you don't have the money, don't use your credit card. Remember, y'all, the goal is to avoid bad debt. Facebook, Instagram, YouTube. That's the goal. So before you go put them $2,000 heels or those Jordans on your credit card or that Gucci fit, before you do that, I want you to think about how much money that would set you back for and how long. Meaning, how long will it take me to pay that back? And y'all, don't forget to factor in interest from that credit card. So if your credit card interest is 4%, 5%, 9%, 18%, 26%, whatever it is, because you got some really bad credit. So if your credit your interest is 26%, y'all, you got some bad credit. You cannot afford to put anything on your credit card. Okay? But I'm hoping that seeing those numbers, when you do that, seeing those numbers should change your mind about making those impulsive and unnecessary purchases. Because remember, the goal is to live below your means, not above. Using your credit card for stuff like that and not for like investment properties and stuff, like no, or for investments that's going to make you more money, buying those heels, buying those Jordans, buying that Gucci fit is not going to make you more money. Okay? Unless you are an entrepreneur and you have a brand, okay? Then that may be different. But still, nonetheless, y'all, the goal is to avoid bad debt. So that's first. Create a budget, stick to your budget, and then if you don't have the money, y'all, please do not put it on your credit card. Number two, second thing is focus on your needs rather than your wants. This is the hardest part for a lot of people, including myself. I still work on that, okay? I'm not perfect there. But I do have to remind myself, like, Leona, do you need this or is this something you really just want? Okay? You don't need to go out to eat every single day. You don't need to go to that bougie restaurant, okay? Especially if you're already on a tight budget, y'all, limit the amount of times that you patron those restaurants per month. Like, seriously, I even had to go so far as to tell myself, look, I gave myself a budget to go to Starbucks because I was like, I looked back at my statement. I was like, oh my gosh, I did not realize that I had started going to Starbucks that much. So I have a Starbucks card, so I put the money on there, and every month, that's all I'm spending. Because I was like, I did not realize I was using my credit card. I was using my debit card. I'm telling y'all, this is what I was doing. And when I went back and I looked, I was like, oh my God. God dang, I didn't realize I was that bad. My husband laughing at me, y'all. But I was like, no, Leona, you got to put yourself. So now I cut it down. I give myself $100. I ain't gonna tell y'all how much I had got up to. That's how bad it is. So I was like, I need to cut myself down to $100 a month for Starbucks. You know, so I still get my Starbucks fixed, but I'm not spending, you know, that large amount just on one thing. That's what I need y'all to understand. Needs versus wants. Starbucks is a want. It's not a necessity. Right? So I want y'all to just consider that. Look at that, okay? Also, cut down some of those subscriptions, y'all. Listen, if you got Netflix, Disney Plus, Paramount, Hulu, like it's so many different types of subscriptions you can have for the TV. Yeah, if you don't really watch TV like that, man, why the heck you got like 5, 6, 7 different subscriptions? No, you don't need all of that. You don't. You know what you can do? I can't say it because this is being recorded. DM me and I can tell you what you can do. Because I'm not getting myself caught up. You know what I'm saying? There's an alternative. You don't have to buy all of that stuff. You know what we have? We got Netflix. That's it. That is it. We're not about to do all of that. Like, that's too much money, y'all. And you may be like, oh, man, but it's $15. Okay, you got $15 here, $10 here, $12 here, $20 here. My husband say marry an IT. Or you can do that, y'all. But I ain't gonna say what I was gonna say because that can get me in trouble. But you know what I'm saying? Like, come on now, like that adds up every single month, especially if you're already seeing that, oh my gosh, I have too much going out and not enough coming in. It's okay to dial it back, y'all, until you catch your wind, you get your footing. Now you can just readjust. And then you can start implementing things to make sure that you have your cushion. On top of it, you're still being able to do the things that you enjoy, okay? You don't want to cut everything out of your life completely, but you definitely need to get to the point where you're being reasonable. On top of that, y'all, if you're living in like a 3 or 4 bedroom house, townhome, condo, whatever, and it's only like 2 or 3 y'all in the house, man, you gotta move out of that thing and move into a 1 or 2 bedroom. That could be a condo, that could be a townhouse, whatever. If you have a really small family, y'all, listen, having larger spaces, especially if you're in like the mode where you're attempting to prepare for a recession, it doesn't make sense. It doesn't make sense. You want to make sure that everything is set up. My husband is retiring. I don't know if he's still on here. My husband is retiring. One of his desires is to make sure that there are certain debt that he wants to have cleared up. Well, guess what? We've made moves so that way, prayerfully, that is actually accomplished by the time he retires officially, like he's back to being a civilian next year in 2025. I see that happening because of the moves that we are making, because of adjustments. Like all that extra, all those subscriptions and all that stuff, we don't even watch. Look, we got here and we were talking about, when my husband brought up cable TV, I was like, but we don't even watch TV like that. We're either on our computers or on our phone, you know what I'm saying, doing stuff. Like he stays on YouTube. So it's like, what's the point of getting cable when you're on YouTube? it don't make sense. So that's why we didn't have cable this whole time we've been here in Texas. No cable. For what? We don't watch TV enough for that. But we do have Netflix. I'm good with that. Me personally, because I barely watch TV anyway, right? Y'all, every cent and dollar counts. I need you to keep that in mind. All right? So doing these things, all right, implementing these practical tips, focusing on essential needs, y'all, you can significantly reduce debt and unnecessary spending while establishing greater financial stability, more investments, and definitely bigger savings accounts, okay? So if this has helped you tonight in any way, shape, or form, let me know in the comments. If you're watching a replay, thank you so very much for just coming back and watching a replay. But let me know, what is it like out of those 3 things that I gave you tonight? What is something that you learned from it? What's the takeaway that you got from this topic tonight? Okay, and then what are some things that you're going to implement? All right, if you're not implementing it already. And on top of that, y'all, don't forget to share, because sharing is caring, right? So I'll be back next week. Just to wrap this up, I'll be back next week. That's gonna be July the 26th. Okay, so 26th July at 7 p.m. Eastern, 6 p.m. Central, I will be back. I'm thinking about changing the time, y'all, for when I go live on Friday. So stay tuned on Facebook and Instagram. I'm going to be doing polls in my stories because I'm thinking about changing the time. So instead of doing it on Friday evenings, doing it Friday afternoon possibly, or changing it to the weekend, just to kind of see what works for everybody, because I've been having some issues with getting on at 6 p.m. So my time anyway, 6 p.m. Central. But nonetheless, hopefully this helped you. If it did, let me know. Give me some thumbs up. Give me some likes, some hearts, all that good stuff. Share. Comment what you took from it, and then join me on next Friday, okay? 7 p.m. Eastern, 6 p.m. Central, 4 p.m. Pacific for my West Coast folks. Thank you all so very much for jumping on. I'm going to leave you all my favorite quote, and that's from the legend. His name is Arthur Ashe. He says, to start where you are, use what you have, and do what you can. I look forward to seeing y'all next week, and I hope y'all have a really great weekend. Bye, y'all.